Welcome to On the Couch with the HinesLove team. My name is Cassandra Hines. I am the senior listing agent here at Ion Real Estate with over 7 years experience.
And my name is HinesLove, and I'm an associate broker with Ion Real Estate with over 13 years experience. Today we are discussing the different loan programs available to today's home buyers.
Our guest speaker today is going to be Chris Germano from K Financial Lending. He's going to answer some of our tough questions that you, the viewers, always wanted to know. Welcome to On the Couch with the HinesLove team. My name is Cassandra Hines.
And I'm HinesLove.
And our special guest today is Chris Germano from K Financial. Chris, thank you and welcome to On the Couch with the HinesLove team. We truly appreciate you coming here today. Now let's get started. First question, give us a little history about yourself.
I work with K Financial. I'm a branch manager. We were established in 1991. We're a full-service lender. We're located in Bloomfield Hills, Michigan. We also write loans in Colorado and Florida.
What would be the benefit of someone coming to K Financial as opposed to going to Chase or Flagstar?
I would say the biggest benefit would be you would get personal service along with better rates and an advantage to a lot more products that are in the industry.
Okay. Number one question here. There's 3 main loans that people get. They're either VA, FHA, or conventional. Can you touch base on each one of those?
Sure. VA loans are government loans for veterans. Basically, they're anybody that's served in the service or is a veteran has the ability to get a VA loan. It's 100% financing. Okay. It's an absolutely great product if you're a veteran. It's
now,
really good.
If I'm a veteran, do I have to be active in order to qualify?
No, you could be a reservist, you could be active, you could be retired. As long as you served in the military service and you have an honorable discharge, you're eligible for a VA loan.
So a person that served, let's say during the Iraq War, but hasn't been in the military since, they would still qualify?
They would be eligible for a VA loan.
Okay,
correct.
Great. FHA?
FHA is a government sponsored loan. Basically what that is, it's for people that don't quite have the down payment,
okay,
or maybe had some bruised credit. Job history could be a little sporadic.
Okay.
They're very lenient on those things, where conventional loans are more for not so much first-time home buyers, more for a person that's buying their second home. You can buy your conventional home, as a first-time home buyer.
Okay.
But you need really good credit. You need, down payment has to be your own. It can't be a gift. It's just a little stricter, but
Okay.
you do get better rates and terms with that. So.
Okay.
Okay, well, I think one of the biggest questions that borrowers have, what type of credit score do I have to qualify for the loan?
That's one thing with K Financial. Our minimum credit score requirements are 500 and above.
Hold on, I don't mean to cut you off. You're telling me if that was an excellent question, Latrice. Seriously, because
thanks for that.
That's the number one thing. Because I'm sure people have went to other mortgage lenders or brokers and with a 500 credit score, and they was basically told, come back to me in about a year, or go do this and go do that. So you're telling me if I come in your office and I have a 550 credit score, you have something or different programs that'll help me out to get a home.
How about a 501 credit score?
Wow.
And you had mentioned what the difference between K Financial and a bank. A bank wouldn't even consider a loan like that. But we can, not saying that if you have a 501 credit score that we're going to definitely give you a loan.
Right.
But if you meet a specific criteria, we can get you that loan. So, and we
Great
do close
question.
them. We do close them. That's an awesome question.
Okay, well, here's another one for you. I have good credit, but I don't have the necessary funds to put towards the down payment.
Okay.
What other way can I gather the funds to go towards my down payment?
The best program for that would be the FHA product. That can be 100% gift funds, can be from a family member, brother, sister, mother, uncle, family friend. The relationship has to be documented.
Okay.
We have to source the gift funds where they came from, and you can do 100% financing. You literally can get into a transaction with no money.
Latrice, you just asked some awesome questions. So first of all, I don't have to have this super great credit score, and I don't have to have no money because I can get it from mom or dad or sister and brother. So did y'all hear those questions? Because these are some things that I'm probably sure that most people did not know, and hopefully they can get educated with this video, and that's why we're doing it. I love it. Those were great questions. Great.
Well, here's another one. I heard you say for FHA, the relationship has to be documented and whatnot. What about for a conventional loan? Is it the same or is it a little different?
Conventional loans, you need to have 5% of your own funds. You still can get gift funds, but you have to have 5% of your own funds. So if you wanted to eliminate PMI, or mortgage insurance,
okay,
you could put 5% of your own funds and you could get 15% gift from your parents or whoever and not have mortgage insurance. But you do have to have 5% of your own funds for that program.
Okay, well, you just piqued something right there. PMI.
Primary mortgage insurance. Primary mortgage insurance is basically insurance against foreclosure.
Okay.
If the person doesn't pay the mortgage payments, the insurance company pays the lender for their loss. It's like in any insurance policy. You smash up your car, the insurance company pays to have it fixed. It's the exact same thing.
So when and well, I think you said the why, but when do they require the PMI insurance?
On an FHA loan, you always, on a 30-year loan, you always have the insurance for the life of the loan now. That's a new law they passed. It's always in the loan. Conventional loans, 80% loan to value or below, you do not have mortgage insurance.
Okay, so the more you put down.
Yeah, you need to bridge that threshold of 80% for conventional.
Okay.
FHA, you put 10% down. You get a reduced rate, but you have the insurance for the life of the loan. In a 15-year, you only have it for 11 years and then 4 years off.
Now, can you do 15-year mortgage with FHA?
You can. You can.
Oh, okay.
Yep.
Okay.
And the rates, the MI factor or the calculation they use to calculate the monthly payment for the insurance is a lot less than a 15-year. And the rates are really good in the 15-year FHA. We actually do that a lot.
Now, what about someone who's self-employed? Like for us, real estate agents.
We do have one niche that the banks definitely don't offer is if you're W-2'd, say if you're a realtor and you're working in an office, you're W-2'd, you make $50,000, and you have $40,000 of unreimbursed business expenses for travel, paperwork, all that stuff. We'll actually base your qualifications on your W-2, not the write-offs on the tax return. So that's one little niche. If a bank would only use what you pay taxes on. So if you said you only paid taxes on $10,000, you'd only qualify as if you made $10,000 a year. We would go by just strictly your W-2. And that is an FHA product, so you're still tied to those guidelines.
Oh, so basically, if I show that I made $150,000,
correct.
but we all know when you're self-employed, your taxes is going to show that you may have spent $60 in all of your write-offs.
Expenses. Correct.
Expenses. Yep. You're still going to go by my $150,000.
As long as it was W-2'd. If it was 1099, I can't. But if it's W-2'd, I can.
Okay, great. Yeah. Well, you know what? We appreciate you coming here.
Well, thank you for having me.
Before we finish, I forgot something really important because we encounter this all the time with the foreclosure market, short sale market. Buyer wants to buy a house, but they need the funds to fix up the house. So are there loan programs where they could actually get the funds to purchase as well as do remodel, update, or any necessary repairs?
That's a really good question. FHA offers a product. It's called a 203K rehabilitation loan. Okay. There's two different aspects to that product. There's the mini 203K, which goes up to $35,000, and then there's the full-blown 203K, which we pretty much can remodel the whole house from start to finish. K Financial offers both of those. Okay. A lot of places don't. There's a very few places that do both, the mini and the full. In conventional, I don't have the details on it. They just rolled out one for conventional that's almost mirrors a 203K program. And maybe on your next show I can do some research and I can fill you in on the details with that. They just rolled that program out for conventional. So
if, like she said, let's say I brought a home that was Fannie Mae or just bank owned, period. And let's say the home is $60,000. So how does that work? You guys will give $60,000 to buy the home, and let's say another $10,000 if needed in repair. Yep. So then my total, would that be two separate loans, or will it just be one loan of the $70,000?
Oh, these are good questions. Basically, you do the 203K mini because you can go up to $35,000. Okay. We're going to lend you 110% of the as completed value, not the as is value. Okay. So if the property's $60,000 and you put $10,000 in repairs, you're at $70,000. So the property needs to appraise for, say, 65, and we'll still do the deal. Even if it's at 70, it's 110% of the as completed value for the mini 203K.
Okay, last question. And I think this is probably one of the most important questions. Because of the downturn in the market, a lot of people were in distress with their mortgages. So we saw tons of foreclosures and short sales. So if I did a short sale, it's been a year or two, or, I want to buy another home. I don't want to rent. How long will someone who's just come out of a foreclosure or a short sale have to wait to apply for another mortgage?
That's a really good question, too, because people think they have to wait this number of years to get out of a foreclosure or a short sale. For conventional loans, 2 years out of short sale, it's 20% down. 4 years out of short sale is 10% down. Okay. 7 years out of short sale is your typical conventional 5% down. We do have an FHA product where you can be out of foreclosure, out of bankruptcy for 1 year. They're tough to get through. With extenuating circumstances, we can get those loans to go through. It can't be just a divorce. It has to be something tragic that's happened to you in your life.
And tragic, you mean like death,
Illness,
loss of income,
and they document it. It is very, very tough to get those through. I do, and K Financial does have this program, and banks do not offer it. 1 day out of foreclosure, 1 day out of bankruptcy. It's a minimum of 30% down. The interest rates run around 9.5% to 10.5%.
Okay.
But they're good for people that are in land contracts that are going to lose their land contract if they don't get out of that situation. You know, everybody can refinance usually 2 to 3 years outside of that product, but it gets them into the house or out of a land contract in an emergency. And we're one of the only lenders that offers that. So.
Well, one last question in connection.
You keep saying that, Latrice.
I know, but
Keep them coming. My juices are flowing. Keep them coming.
I heard you say that you had a program where 1 year out of bankruptcy or foreclosure
Correct.
for FHA. But in general, if you had to file bankruptcy, what is the time frame before you can move forward to purchase again?
It's 3 years. It's 3 years for FHA, and it's 5 years for bankruptcy and 7 years for foreclosure for conventional. And actually, VA, 1 year out of bankruptcy, they'll consider it. It's a manual underwrite. They will consider it. So.
Okay.
Okay, so Chris, if people want to get more information about these awesome programs that you have to offer, tell us, where can they reach you at?
We're at K Financial. We're in Bloomfield Hills.
Okay.
Our number is 248-930-9438.
Now, do you have a
Just
website?
ask for Chris. Yep, kfinancial.com. We're actually revamping the whole thing, so the old one will come up, but we're having a really new one all under construction right now as we speak. So,
Okay.
they can
Well,
go on that
thank
too.
you, Chris, for coming out. I'm
You're
sure
welcome.
you got
Anytime.
some people that will be contacting you because you gave some awesome answers. Told us
Awesome.
about some programs a lot of people didn't know about that I didn't even know about.
And there's a lot more that we could talk about on another day. They're coming out with all kinds of new stuff for lending. A lot of people can get loans that didn't think they can. They should
Right.
call us and try, and we'll help them out and see if we can get them off shopping with you to buy their first home.
Sounds great. We'll also have Chris' number on the screen here. You can call Chris Germano from K Financial. And once again, thank you all for tuning in. Well, that's it for today. We want to thank you so much for joining us. We want to thank our guest, Chris Germano from K Financial, for answering those questions for us. I think it went great. What about you, Latrice?
I think it was awesome. Chris was really helpful.
Yes, very helpful.
His information was very informative, and I think our viewers have received information that will really help them. So until next time, that's it for On the Couch with the HinesLove team.
If you want to reach me or Latrice or anyone here at I Am Real Estate, give us a call at 248-539-1200, or you can email me and Latrice at HinesLoveTeam@gmail.com. Until next time, we'll see you soon.